Hello value investors, thank you for joining me. Today we're going to talk about Cisco and why I believe that Cisco is undervalued. We're going to talk about Cisco's comparisons going into next year, and we're going to talk about Cisco's valuation and how it compares to the rest of the tech space. So if you haven't done so already, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'm having a price hike in January 21 because of the strong performance we've had in 2020. So don't forget to do a free trial there to see if you find any stocks that suit you. So the thing with Cisco is that amidst this like 2020 tech space, everything just going soaring upwards, Cisco's been an underperformer, and the reason is that it's really not fared particularly strongly in 2020, whereas the illusion of most tech companies being beneficiaries in this environment and pulling forward, accelerating as the economy was closed down and many spaces had to basically go online, Cisco didn't really benefit. You can see here in the graphs that it's Q3 and Q4 particularly bad for Cisco. Now, if we reverse that and we think about, so the stock has gone nowhere. So the stock is down 6% since the start of the year. So this has obviously underperformed the S&P dramatically, underperformed the tech space dramatically. But as we come out of that, and it's already comparing with Q2 of fiscal 21, the calendar years and fiscal year slightly misaligned. But if you look out to this quarter coming up, it's already guiding at the midpoint to be negative 1% year over year. So firstly, that's hugely better than last quarter was negative 9%. But as we come to lapping this year, it's going to start looking a lot better. Another thing that is worthwhile noting is that if I go back over the past 3 years, Cisco's it's beaten its guidance, it's beaten consensus, which is probably the same as the guidance as well, every single quarter over the last 3 years. So we can practically say that Cisco's going to be coming out with 0% year-over-year growth rates. Now, this is not a bad position for Cisco because it's a dramatic improvement from what it had last year. But I just made a point here in the article that if we look at Cisco and we compare it to Zoom, so a couple of weeks ago, Cisco's market cap and Zoom's market cap were practically the same. Okay, what Zoom makes in revenues over the last 12 months, Cisco pays out after tax as a dividend over a period of 90 days. So in 90 days, Cisco's dividend payout, not including share buybacks, dividend payout is practically the same as what Zoom makes in revenues over a 12-month period. And their market caps are practically the same. They're now kind of split off slightly with the vaccine in the news and stuff, so Zoom has come down slightly and Cisco's kind of marginally improved slightly. But this is really the sentiment right now. People are willing to pay large multiples on top of sales for many of these companies, and Cisco, by my calculation, so if we assume that Cisco's top line doesn't perform particularly well in fiscal 21 and there's a bit of kind of operating leverage improvement on the bottom line together with the buybacks, on the bottom line, let's say that the EPS number comes up 3% year over year. So by my estimates, it comes up to $3.30. So at today's share price of approximately $44.70, that the stock is trading at 14 times forward earnings. That is not a large multiple, 14 times forward earnings for a tech company. So as Cisco continues to be more of a software company and come away from being a hardware company, I think that investors will start to finally reprice this a bit higher. So as I said in the article here, there's a lot of negativity being priced into Cisco, and assuming that there's not going to be the large negative drawdowns on the revenue growth rates, I think that Cisco could be quite an attractive investment. So anyway, don't forget to check out my marketplace, Deep Value Returns on Seeking Alpha. I'll tell you which stocks I own and why. We'll balance arguments for the stocks I own. And don't forget to get in before the price hike. See you soon.